This is Bloomberg Technology. Coming up, fake news takes center stage in France with the presidential election just days away. How big tech is mobilizing to prevent viral misinformation from influencing the vote. Plus, after an earnings bonanza with Apple and Facebook leading the charge, we'll break down the biggest headlines this week in tech. And free original content courtesy of YouTube will put the video giant's big bet on ad-supported celebrity-driven shows under the microscope. First, to our lead. The Nasdaq and S&P 500 closed at new all-time highs, and U.S. stocks rose for the third straight week. Our Bloomberg News stocks reporter Abigail Doolittle joins us now from New York. So, Abigail, what happened this session in tech stocks and the week in general?
Pretty amazing, Emily, because today we started off, it was a relatively lackluster session. The three major averages were really weaving between small gains and losses. And then on the close, as you mentioned, we have both the Nasdaq and the S&P 500 finishing at record highs. And a lot of this has to do with tech. Tech was the best performing sector on the week relative to some of the best stocks for the Nasdaq, helping the Nasdaq rise for a third week in a row. The best was Regeneron. Regeneron had the best weekly gain. In fact, on pace, had its best week, since November of last year. They posted a solid March quarter, beating revenue estimates by 1.5%. And in fact, Jefferies is saying that their eye drug numbers were good enough. So that stock really went up quite nicely on those results. Another winner on the week, Citrix Systems, the software company. Sources close to the matter are saying that some of the bids were made for the company last week, could include Bain and Carlyle. Now, this company does have a $12.3 billion market cap. They may not choose to sell themselves at all, but on this, the stock really shot higher on the week around those big investors, the possibility that they may buy Citrix. And then finally, we also had the online travel agents gain this week. And Mandeep Singh, a Bloomberg intelligence analyst, he said this had to do with a report out of Europe suggesting that demand for travel is very strong. Interesting, though, on the day, Emily, both of those stocks were down just a little bit as hotels are saying that they're going to fight the, quote, monopoly that these two online travel agents have formed. It'll be interesting, of course, to see how that plays out.
Now, we did see some moves on the back of Apple earnings. Tell us where we ended up.
Well, records. It's another day, another record for Apple. It's pretty amazing. They, of course, put up a March quarter that was a little bit disappointing. They beat on earnings estimates, missed on revenues. The guide for the current quarter was a little bit light, but it looks like the Street's really giving them a pass on the iPhone 8 super cycle, waiting to see. So that's where all of the pressure is toward the back half of the year. And when we hop into the Bloomberg and take a look at #BTV 3563, this is a longer-term chart. And the point to be made here is back in 2012 and 2013, you can see that the stock plunged in a big way. That was on disappointments around the iPhone 5. Then it sort of bottomed, and then shot up in a huge way. We see something very similar here. Of course, the disappointment was on the iPhone 6S. Now the iPhone 7 has been stronger. Everybody's looking forward to the iPhone 8. It's worth noting, though, Emily, if you take a look at the recent move up to these record highs between those two blue lines, it suggests we could see some choppiness between those two blue lines. But the technicals here are mainly pretty solid. And then finally, let's round it out with both Netflix. Netflix did trade higher on the week, having its best week, actually up for a second week in a row, gaining perhaps on that Baidu deal announced last week, their entry into China. Plus, Jim Suva over at Citi is saying that he thinks that Netflix could potentially be bought by Apple with that huge Apple cash pile of more than $250 billion. And Microsoft and Intel, let's not leave them out. They both were among the best stocks for the NASDAQ after Microsoft did release a $999 laptop, and Intel's chip is inside that computer. And it seems that investors are cheering that as well. So overall, tech was the best sector on the week, Emily, and really helping that NASDAQ.
All right, our Abigail Doolittle in New York. Abigail, thanks so much for that update. As Abigail mentioned, we've gotten a lot of earnings report cards over the last couple of weeks from the biggest tech companies, Apple to Alphabet, Microsoft to Amazon. So far, the majority have beat on revenue and earnings. What does it mean for the overall health of tech stocks? Can they keep it up? Joining me now to dig in, Redpoint Ventures partner Tom Tungus. Tom, great to have you back here.
Thank you so much for having me
on the show. So can tech stocks keep up with this optimism?
I think the optimism is real. I think the big changes that are happening in the ecosystem are these secular changes, like the move to the cloud. And that's a big driver for Amazon. We see 50% growth year over year in the AWS division, and you see large enterprises starting to move, and that's what's driving a lot of the operating income and a lot of the growth.
So the frothiness is worth it.
Yeah, it's, the public markets are different than the private markets. I'd say in the private markets we're seeing a little bit of a reversion to the mean. A lot of the frothiness.
How so?
Well, when you had me on the show, say a year ago or 18 months ago, we saw that private market valuations were 2x the public market ones. So the same company in the private markets was worth twice what it is in the publics, and that's no longer the case.
You wrote about a spike in venture debt. Why is this a trend?
So there are two ways for startups to finance their growth. One is to raise equity dollars. People like me, venture capitalists, invest dollars to buy shares, and that dilutes the company. So we buy 20 to 25% of the company in a round. But there's this recent trend where companies actually borrow. And it's happening more and more. And in fact, it's growing faster than some of the equity investment. And it's because this kind of financing is actually non-dilutive to founders. So they can actually raise the capital they need to grow without taking on nearly as much dilution. And what we're seeing is, as companies stay private longer and longer, like an Uber or a Dropbox, which 10 years in order before they go public, instead of raising that pre-IPO round, they're actually raising $500 million, $1 billion, or $2.5 billion in debt.
When you talk about private companies reverting back to the mean, are Uber and Airbnb an exception?
They are.
And are they the only exceptions?
No, there are many exceptions.
Okay.
There are quite a few companies that are fetching still premium multiples and premium valuations. What I mean by reverting to the mean is the exceptional companies will always command exceptional prices, but 2 or 3 years ago, every company was commanding exceptional prices, even though they may not have warranted it. And so the reversion to the mean means the middle class of companies, the companies who aren't growing as fast or aren't as iconic, the prices for those companies have come down quite a bit.
So are we in the middle of a reckoning in private tech?
Not a reckoning. It's a reversion to the mean. It's a slow correction. It's nothing as dramatic as we saw in 2000.
Okay, let's talk about the jobs report. Solid report, added 211,000 jobs. At the same time, you had Eric Schmidt, the chairman of Alphabet, talking about how he doesn't think that robots are going to take all our jobs. He said, I'm not going to take the position that because no one really knows the answer, that this time is not different to previous industrial revolutions. But while we have a tremendous dislocation in jobs, I'm not denying that in aggregate, there will be more jobs. A little windy way to say it. Yeah. Do you agree with him?
So when the first dishwashers came out, that was the first robot in the house. And people were terrified that all the dishwashers employed in lots of restaurants would suddenly be out of business. Today, there are about 500,000 people who do that job. So no, I don't think robots are going to put people out of a job. Another way of saying it, I was on a panel with the former executive at Tesla. And inside the Tesla mega factory in Nevada, there are as many people employed per car produced in that Tesla factory as in any other factory in America. And so what really ends up happening with machine learning or artificial intelligence or automation is not that we have fewer jobs, it's that the kinds of work that humans do changes. And we're able to focus on more interesting work, more cerebral work, as opposed to more manual work.
So let's talk about self-driving cars then. For example, Uber and Alphabet are in the middle of this big lawsuit over, whether or not technology IP was stolen. If self-driving cars are a success, what does that mean for all of these people who have been building cars in the first place?
Yeah, so
and driving them.
Well, so there are 5 different stages of automation. We're not going to get to the 5th stage, which is you and I sitting in a car having a coffee in the next 15 years. I don't think that's going to happen. And so we're
still going to have to be sitting at the steering wheel, is what you're saying.
Yeah, either that or there are companies that offer to drive trucks through remote control, the way that we drive drones in the military today. And so humans are going to be involved in self-driving cars for a very long time, probably another 15 to 25 years. And the idea is that during that time, people will be able to learn new skills and still be employed. So this is not a discontinuity where tomorrow the 19 million cars that are sold in the US each year or whatever it is are suddenly going to become fully automated and everyone's going to be without a job. It's a much more gradual change than most people appreciate.
What are the new skills?
What are the new skills? Well, so imagine driving 8 trucks at the same time instead of driving 1. That's one. That's a big one. I think the gig economy also is definitely fragmenting labor. One of the big themes that we're pursuing inside of our firm is new forms of education, much more vocational education. And so what those skills are going to be, I think, is still to be determined. But we're hopeful that as we invest and build the next generation of educational institutions, people will be ready for.
So if automation is a mega trend, if private companies, some of them are reverting to the mean, where do you see the most potential? What are you putting your bets on?
So we're spending a lot of time in machine learning and artificial intelligence. And we've made an investment in a company that's speech recognition for sales. It's called Chorus. And we believe that speech recognition is the new form of human-computer interaction. Turns out you can actually speak 3 times faster than you can type. And so it's much more convenient to speak to a computer. Another big area of focus for us is machine translation. That's translating from one language to another. Computers can now do that better than humans at scale. And so we're continuing to look for investments in that category.
Last question, you were here a year ago. What are we going to be talking about when it comes to the market a year from now?
I think we'll be talking about a very heady season of very large IPOs. The IPO market is, we've seen about 9 companies go public through May. That's much on a 2x pace compared to last year. We still got
But Uber and Airbnb, I mean, all signs point to those ones being even a couple years out.
There's a lot of regulatory questions to be answered in both those cases, but I think at some point those 2 companies will go out. You still have Pinterest. You still have quite a few in the IPO pipeline. And if the recent markets have shown there's a lot of appetite for high growth technology companies, the average gain I think is 35% on new issuances in the IPO market. So the doors are open, and so lots of companies will be going out. It's a very exciting time.
All right. Tom Tungus, partner at Redpoint Ventures, thank you so much for joining us. Great to have you. Coming up, is Warren Buffett saying bye-bye to Big Blue? We'll discuss why the investor is cutting his stake in IBM. And Bloomberg Tech is live streaming on Twitter. Check us out at Bloomberg Tech TV weekdays, 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. Ahead of its annual shareholder meeting, Berkshire Hathaway CEO Warren Buffett disclosed shrinking his position in a tech giant. Buffett told CNBC he has cut his stake in IBM by about 1/3 over the first half of the year. Shares of IBM fell on the news, at one point trading at its lowest level since November. For more, I want to bring in our Bloomberg editor-at-large, Corey Johnson, in New York. So, Corey, what's your read on this?
Well, I mean, I can't say I'm completely surprised at this. I was frankly surprised that Buffett held in so long. The fundamentals of IBM's business are not the kind of fundamentals that he tends to like in a business. He's not afraid to step into a business as it's being turned around and making progress. But when you look at IBM's results over the last few years, you know, the stock, now his first purchase of the stock was at a lower level, but he bought a lot of stock when it was near its all-time highs in 12 and 13. That's when most of his stake was purchased. And so this has been a money-losing position, we think, for Warren Buffett, but certainly a difficult one. And the corporate results, frankly, reflected a business that's contracting, not growing, which, of course, is what Buffett wants.
How much has he lost?
We don't know the numbers yet because we don't actually know what he paid for the stake itself. We don't know if we're actually going to find out at all. It's going to depend on sort of when he sells, what he sells. But fundamentally, he didn't make money on the trade. And it's a reflection of IBM's business. I mean, if you look at any series of numbers on IBM, in particular, if you look at the sales figures, you see a business that's been shrinking every year. Now, IBM said we're going to shrink the business. Ginny Rometty's plan was to shrink the top line and to grow the bottom line by being in higher margin businesses. But you look at the EBITDA growth, well, there hasn't been any. EBITDA, earnings before interest, taxes, depreciation, and amortization, has been falling, down 5%, down 7%, down 12%, down 11%. It's getting, not only is it getting bad and getting worse, it's getting worse faster. And that's a great concern. It's obviously not the kind of business he wanted to be involved in.
Now, Buffett has said in the past that he doesn't understand technology. He has a stake in Apple as well, but he doesn't own an iPhone. In fact, he still has a flip phone, and apparently he's quite happy with that. Is this investment proof that he maybe shouldn't be investing in a sector he doesn't really understand?
Yeah, I mean, I think really what he doesn't understand is really about the valuation of tech stocks and stocks that are valued on what they have yet to do as opposed to what they've been doing. Not necessarily just, you know, the intrinsic value and the free cash flow generation from the business is sort of always on the come. And I share with them that as much as I've been covering technology for so long, it's hard to believe in companies that haven't done anything yet. It's really hard to do what venture capitalists do. His business model is really built on the Benjamin Graham model of finding discounting future cash flows, understanding the intrinsic value in a business. There was a clue, however, that this wasn't his kind of company. In the most recent annual letter, Emily, you know, Emily, that when the annual letter comes out from Berkshire Hathaway, I abscond to a quiet room very early on a Saturday morning and go through the letter. And I got to this section this year where he was talking about what kind of businesses he and Charlie Munger like, and the kind that they don't. And he talked about, I think we've got the exact text of the letter available, but he talks about sort of how he and Charlie look at the stock market, and they learn, Charlie Munger, of course, is his business partner, and he says, Charlie and I cringe when we hear analysts talk admiringly about managers who always, quote, make the numbers. In truth, business is too unpredictable for the numbers to always be met. When they do, a CEO's focus is centered on Wall Street will be tempted to make up the numbers. Well, IBM always makes its adjusted EPS number. They boast about that in conference calls and press releases and in emails to journalists. But the stock tends to suffer because they seem to be focused on making adjusted numbers, not able to make the business any better. And so I think that was a clue to us that Warren Buffett had kind of given up on IBM.
All right, Corey Johnson, our Bloomberg editor-at-large in New York. Thanks so much, Corey.
Sure.
Coming up, YouTube is betting big on original content to round up ad dollars. We'll bring you the latest live from Los Angeles next. And this weekend on Bloomberg TV, we bring you our best interviews from the week, including Anthony Noto, Twitter Chief Operating Officer and Chief Financial Officer, on the company's challenges and road ahead. Tune in this Saturday for the best of Bloomberg Tech. This is Bloomberg. A story we are watching. Citi analyst Jim Suva wrote a note on possible Apple acquisitions. Among the targets, Netflix, Disney, Hulu, Tesla, and EA. Suva says Netflix would be Apple's best bet. He explains the iPhone maker could use 1/3 of its cash to buy Netflix and 2/3 of its cash for buybacks. Apple remains a buy at Citi. We've been reporting on YouTube's plan to expand original content, and now the company is betting even bigger. On Thursday, YouTube announced it will produce a half-dozen original series that'll be available for free on the world's most popular video website. The Alphabet-owned company hopes to attract not just viewers, but advertisers. Here with more on the expansion plans, Bloomberg News LA Bureau Chief Chris Palmieri. So, Chris, what do you make of the strategy and the reality that it succeeds?
Well, my first take was, oh no, more TV. You know, I was talking to a friend of mine today, and he said, oh, The Handmaid's Tale is great. And I said, oh no, now I got to subscribe to Hulu too. But, you know, this is, you know, YouTube, these were the guys that really invented videos on the internet, and they've watched Netflix and Amazon and other people steal the thunder. So we're seeing really a huge push by them in the last year or so. They've got 35, channels coming out, a typical cable-like bundle they're offering. They've got YouTube Red, which has got original programming for $10 a month, and now, hundreds of millions they're investing in original content. Some of it you're going to be able to watch for free. So this is a big push, to capture some of those, original programming eyeballs. But also in the big picture here, Google kind of crushed print advertising, and now this is their chance to bring all those analytics and that to the TV world and steal a lot of that billions in revenue.
I interviewed YouTube CEO Susan Wojcicki towards the end of last year, and I asked her about her vision for the future, and she said she imagines that YouTube will be a platform for all of these different media companies. Take a listen to what she had to say.
I think if you fast forward 10 years, you're going to see that there's going to be a new generation of these media companies that have really strong followings. They're able to create amazing content. It's going to be global. They're going to be able to interact with their fans in all kinds of amazing ways. And I'm really looking forward to being part of that.
Do we know anything about the numbers, Chris? I mean, can YouTube, or is YouTube competing with Netflix or Hulu or Amazon? Can they actually give these guys a run for their money?
Oh, no doubt about it. And, we're seeing, this was the week of the new fronts, all these online video companies promoting their wares, and, a lot of amazing technology coming out, really targeted advertising, and Nielsen's got a way of tracking every single viewer. And, and we've seen just a dramatic turnaround, even just for YouTube. I mean, it was just a month or so ago, big advertisers were canceling. There was a big controversy. They didn't want their ads, placed next to beheading videos and that. And now Johnson & Johnson, which is one of those advertisers, is a big sponsor of one of these new YouTube shows. So they're really starting to embrace online advertising. And with all this spending, you're going to see some viewers.
How is this different than what YouTube has done in the past? Quickly.
Well, they had a push 5 years ago, spent $100 million, create a lot of original content. They did, enlist some people. Shaquille O'Neal was one, but this time there's an effort to create content with people that have both online followings and traditional followings. Ellen DeGeneres, for example, and a lot of it's timing. This is really the tipping point year for this online TV.
Comedian Kevin Hart, Ellen DeGeneres, the talk show host, will be producing some of these new unscripted shows. We will be watching. You will be watching, Chris Palmieri, in charge of watching all the new original content out there. Thanks so much, Chris, from our LA bureau. Coming up, we will bring you the top tech headlines of the week, including a possible criminal probe into Uber's secretive Grayball program. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg.
Parenti in Washington, and you're watching Bloomberg Technology. Let's start with a check of your first word news. French presidential candidate Marine Le Pen was booed and pelted with objects. That occurred during a visit to a local cathedral. Protesters were mostly supporters of rival Emmanuel Macron. Be sure to stick with Bloomberg. We will bring you special coverage of the French presidential election runoff result on Sunday. Meantime, activists with the environmental group Greenpeace unfurled an anti-Le Pen banner from the Eiffel Tower. It contained the French national motto, liberty, equality, fraternity, and the word resist. It was removed after 45 minutes. A conservative cleric running for president of Iran says the nation's nuclear deal with the U.S. must be respected. Ibrahim Raisi says despite issues that exist with it, the deal should be considered legitimate. Raisi is hoping to unseat current President Hassan Rouhani in the May 19th vote. In Florence, Italy, European Commission President Jean-Claude Juncker opened his State of the EU address today with a direct swipe at Britain.
I'm hesitating between English and French. But I made my choice. I will express myself in French because slowly but surely English is losing importance in Europe.
Juncker spoke ahead of formal talks for Britain's exit from the bloc, saying the EU will negotiate with the UK in, quote, full transparency. He meets with President Trump in Brussels May 25th. The EU chief Brexit negotiator responded today to claims that the bloc is responsible for uncertainty leading up to the Brexit.
The only cause of uncertainty is Brexit. The only way to remove uncertainty and to protect rights properly is through an Article 50 agreement.
Michel Barnier also says before trade negotiations begin, he wants to ensure the rights of people living and working in the UK and the EU. German Chancellor Angela Merkel is standing tough against President Trump's demand that Germany pay more for NATO defense. NATO countries are expected to contribute 2% of their gross national product on defense. Germany includes foreign aid in that total, but Mr. Trump does not. Merkel today said she stands by her country's spending approach. A deal to set up 4 safe zones for civilians in war-torn Syria goes into effect today. Now, this deal between Russia, Turkey, and Iran would ban all military actions in those areas. Global news 24 hours a day, powered by more than 2,600 journalists. From Washington, I'm Elisa Parenti, and this is Bloomberg.
This is Bloomberg Technology. I'm Emily Chang. Earnings season is just about to wrap up, and almost all of the tech giants have reported, including Apple and Facebook this week. But next week, we'll get Snap's numbers, its first earnings since going public. To break it all down and other big stories of the past week, we've got our Bloomberg Tech editor, Alistair Barr, and our Bloomberg Tech reporter, Eric Newcomer. So let's start on Apple. Obviously, shares dipped post-earnings, but ended up 4%. I mean, I know there's concern about the iPhone, but there's also a lot of optimism about services. What do you think is the big takeaway?
Yeah, so the actual number of iPhones they sold went down a little bit compared to the year before, but the iPhone revenue went up, which means they sold, a lot of people bought the high-end iPhone, the 7S, and that bodes very well for the new iPhone coming up later this year. So from that point of view, it's good, and then you add in the services business, which means that even if you don't buy a new iPhone, you might subscribe to Apple Music, you download apps, all that type of thing, and they're making a lot of revenue on that now.
He also played up revenue from wearables, which is, the Apple Watch, AirPods, Beats. He said it's the size of a Fortune 500 company, which, by the numbers, I guess he's right.
Yeah, I mean, I would say that is, it's not a disaster. That would be my take on that. It's not doing amazingly well, but it's not going to go away, and they're still working on those types of things. But the AirPods, especially, you could have a lot of new technology based off that, based on voice interactions, things like that.
Let's talk a little bit about Facebook, Eric. I mean, the biggest concern is that they're running out of space in the core app to show ads. But of course, there's Instagram, then there's WhatsApp, then there are all of these other issues about violent content and what they're doing to further police that.
Right. They'd already said, okay, we're going to reduce the ad load in feed. Then they just reiterated on the call, and everybody freaks out about that again, even though at this point it wasn't new. So I think they're definitely trying to warn the markets about that and say we're going to calm down sort of how many ads we're putting in the feed. On the other hand, I think people are really excited about Instagram. It's sort of, even in the startup ecosystem, a place people really want to advertise. So I think that's going to absorb some of this concern. And then, like you said, video, it feels like they're still trying to figure it out.
They're not going to shy away from live video, though. I mean, they're adding 3,000 people to police it.
Right, and there's just a report in Business Insider saying they're going to do some premium stuff. So we're seeing they're committing to video, even though it definitely, as a user, doesn't feel like they figured it out, which I guess is sort of an upside potential if you want to spin in a favorable light for Facebook.
Alistair, what do you think of the potential for Facebook to succeed in original content? Everyone's doing it. Can everybody be good at it?
Well, they just actually pulled back from bidding on sports content, which is that's the best example. Like Amazon and Twitter, and everyone's going crazy for sports content and paying so much. So they're not going to do that, which means they are being a little tentative. But I think that just the opportunities are just way too big, right? If you can grab a third of what YouTube does or half of what YouTube does, it would be a huge business.
So Snap is coming. What can we expect?
Yeah, I mean, it's going to be this first quarter that we really get to see them as a public company, so I think it's super important. It's going to set our expectations. Are they a high growth company or not? I think there's going to be this big debate around sort of user growth versus how well they monetize their existing users. Obviously, Snap would much prefer us say, oh man, we can really monetize these users that we have. They're super engaged, much more engaged than they would be on Facebook or Instagram, and that's what makes us valuable. We'll continue to come out with new products. Pay attention to that. Don't pay attention to the fact that we are not Facebook. We are not some huge global international business growing all over the world to the same degree. Don't treat us like Twitter. I don't know.
Shares up 36% since the IPO. All right, let's talk about Uber. Every day, another Uber story. Now they're facing a criminal probe over this gray ball situation. What's the latest?
So we found out through the city of Portland filed this sort of extensive document that included this mention that the U.S. Justice Department was investigating Uber. And we wrote about that a couple of days ago, and people are sort of really seizing on this idea that, and so the Justice Department is looking into Grayball, which is what Uber used to sort of obscure itself from police departments, law enforcement officials, and competitors, and sort of make it hard for people to find Uber drivers. And it's called Grayball because it's where they thought they were operating in a gray area legally. So it's let's hide from them, hide our drivers so that so they don't get arrested.
Al?
Yeah, I think in general, the pattern is this is an amazing company. It's kind of won in its market, and now they're messing it all up. So you could even look at the hiring of Anthony Lewandowski. They had a great self-driving car program. Then they hired this guy who's obviously a little crazy, and they've messed it up, and a lot of people have left. I mean, they're tripping over themselves right now.
And interestingly, I mean, I've heard just anecdotally that Lyft is gaining momentum. I mean, you talk to users who say either they've deleted Uber or they start with Lyft. You talk to drivers, and most of the drivers that I talked to seem to prefer Lyft. What are we supposed to take away from that?
Yeah, I saw a bunch of Lyft people the other day, and they were like glowing. It's like they all just had weddings or something. They were very happy. So yeah, I think there's definitely that sentiment. Everyone's very happy over there, and everything just keeps coming on the Uber front, and it's a lot of old stuff. It's their sort of old skeletons sort of getting dug out of the closet now that everybody's putting a lot of scrutiny on them. And so they are sort of going to have to figure out, how do they overcome sort of all this history. I think part of the hope is the Holder report, a new COO, those things happen and they say, hey, stop criticizing us for obviously having made a lot of mistakes. We're a new company now. And so I think we're going to start to see that messaging of the new Uber sort of over the next couple months.
All right, Eric Newcomer, our Bloomberg Tech reporter, Alistair Barr, our Bloomberg Tech editor. Thank you both. By the way, I said that Apple shares were up 4% for the week. That was Snap. Apple shares are actually up 1.6%. All right, net neutrality rules are almost fated to change. That's according to the FCC chairman, Ajit Pai. Pai, who became chairman of the commission in January, recently gave more of his take on the fate of net neutrality while speaking at the right-leaning American Enterprise Institute Friday, saying you don't need a weatherman to know that the wind is blowing as certain FCC rules toward modification or elimination. The FCC will vote on May 18th to formally begin the process of loosening regulations that enforce the net neutrality rules for internet service providers. Disney could be headed once again to the top of the summer box office. The studio hopes to capitalize on the power of proven franchises, rolling out sequels to Guardians of the Galaxy, Pirates of the Caribbean, and Cars. Guardians could top $1 billion in global ticket sales. The summer movie season is a bellwether for the year, generating almost 40% of annual domestic box office. Coming up, the world turns to France this weekend as the country votes for its next president, and the polarized race is getting even more heated with concerns about fake news. We will discuss how big the problem is and what tech giants like Google and Facebook are doing about it. Ahead of the French presidential elections this Sunday, there is widespread anxiety that fake news could sway the vote. How big a problem is this for France? What's being done to combat it ahead of the election? We are joined now from New York by Paul Quigley, CEO of NewsWhip, a data and analytics firm that's worked with news organizations like the BBC and the Washington Post to identify fake news. And with me here in San Francisco, Sarah Fryer, our Bloomberg News tech reporter. So, Paul, I want to start with you. We've seen reports that a quarter of the links shared on social networks in France around the election are fake news. Is that accurate?
There is, that's reasonably accurate. There is a fake news problem without any doubt. But what we'd like to do is try and quantify how bad that problem is. So when we're talking about fake news, we're talking about the false stories that are out and out fabrications, but we're also talking about very partisan reporting, getting a little bit of a fact and then wrapping it up and telling a very one-sided story. So a lot of websites specialize in doing that. And when we looked at data about from the last 2 months in the lead up to the French presidential election, we can see fake news is a problem, but it's not a huge problem. Of the top 200 most shared stories, about 20 of those would be from the more partisan type sites. And if you compare that with the run up to the presidential election in the US last year, 72 out of the top 200 stories were fake. So almost 40% of stories were fake in that instance, but only 10% in the French instance. So it's not as bad a problem as it was in November of last year.
Still, it is a problem. I mean, you don't want any of the news stories that you read to be fake.
Of course
Sarah,
not.
What is Facebook doing about this? What is Google doing about this? What is Twitter doing about this? Now that they have at least, one big lesson under their belts.
I think the first thing they did since November was admit that they had a problem, right? They saw this happening, and then there was this public uproar, and then they decided, okay, we have to tackle this problem, but we don't know exactly how. So there's a mix of technological solutions and human solutions. They're trying to figure out if there's an algorithmic way to do this, but at the same time, these platforms don't want to be arbiters of what's true or false. So Facebook is teaming up with journalists, so is Google, to try to align what fact checkers have to say about stories with the posts on their network to try to make it a little clearer for people maybe they won't get as easily misguided.
Now, Google backed a collaborative verification platform called Crosscheck to fight fake news, specifically around the French election, Paul, and they're using some of your technology at NewsWhip. How's it actually working?
So you've heard the old saying that a lie can get halfway around the world before the truth gets its boots on. So Crosscheck is about the truth getting its boots on faster. And it's a collaborative project started by the First Draft News Coalition, and it's got 37 newsrooms across France, all spotting very early on when a new trend is emerging on social media, like a new video, a new piece of content, an image that claims to be an image of candidate, something like that. So where our technology comes in is we're really good at spotting content as it starts to trend. So the journalists can then spot something very early on. And in the instance of the first big fake story about the candidate, French candidate Macron, saying he was being financed by Saudi Arabia, that was spotted by journalists within an hour of it starting to break on social media, and they were able to stick a pin into it really quickly. And I think this kind of collaboration and this awareness up front of fake news is why we're seeing less of it in the French election than when we saw that back in the US election last year.
So, aside from the quantity of it, what other trends are you seeing emerging in the fake news that's specifically focused around the French election?
I think what we see again, there's been at least 2 out-and-out fabricated stories, but there hasn't been as much as the US. As there was in the US, and part of that might be that the pirates haven't come to town this time. In the run-up to the US election, you had Macedonian teenagers, content farms in California, all churning out stories that they reckoned one side or the other wanted to read.
There was a study by Facebook that was released last week that did point to some what they call information operations, that sort of these people who create fake accounts under real people's names to try to spread information in comments and message groups around the web, and they actually got rid of 30,000 accounts in France that they saw spreading information. So yes, you're right, it's less dramatic, but there is still a lot of coordinated efforts to misinform.
That brings me to, the question, can fake news really be stopped, Paul? Is this something that, can really be prevented?
Well, it's hard because people have predispositions to liking certain kinds of stories, and if you have a certain opinion of politicians and you're getting fed a diet from particular websites that you love that confirms your worldview every day, you're going to want more of that. So people are kind of opting into fake news a little bit as well. So it's hard for the platforms, all right, because they're developing algorithms that are serving you the stuff you want, and if you want fake stuff, it's hard for them to step in and protect that. I think one thing that's important is that journalists and people in media are able to step outside their own filter bubbles and see what stories are trending in the worlds that they're not normally a part of and that they're not normally looking at. Like throughout 2016, we saw on our platforms that Trump content was getting 2x every month, 2x the amount of interactions that content around Hillary Clinton was getting. So it was a huge groundswell, but it was all on websites that probably your average reporter at the New York Times or the Washington Post had never heard of and didn't know existed until November 9th.
Sarah, you and I talked to Facebook COO Sheryl Sandberg this week ahead of the earnings call. We asked about fake news. She said they take it very, very seriously. What's your read on whether Facebook can actually get this under control?
Well, the company needs to take it seriously because it's not an issue for their revenue, as Sandberg told us, but it is an issue for their users feeling like they trust the platform to inform them, and we get more and more of our news passively. I think that this is going to be a situation like spam, like hacking. You can only move as fast as you can to fix the problem, but then somebody will find a way to make it worse again. They're always one step ahead.
Right? Okay. Sarah Fryer, our Bloomberg News reporter, Paul Quigley, CEO of NewsWhip in New York. Of course, we're going to be watching the French election intensely this weekend. Quick programming note, Bloomberg TV and radio will bring you special coverage of the French presidential election runoff on Sunday. Next, we will look at the funding of biotech research as the industry faces an uncertain future under the policies of President Trump. This is Bloomberg. Welcome back to Bloomberg Tech. I'm Emily Chang. Next week, the Trump administration meets with biotech leaders talking about future funding for research. as the industry faces a lot of uncertainty under the new president. Bloomberg Television will be in the hub of biotech in Boston for a special week of programming, shining a light on tech and the biotech ecosystem. Bloomberg's Caroline Hyde will be presenting special coverage and joins us now with a look ahead. First of all, Caroline, thank you so much for filling in for me while I was gone. You did an amazing job, and things are even better now that I've returned, so thank you for that. Tell us what you've got on tap next week.
What a pleasure. And now I'm gone East Coast. Literally, I'm getting a tour of the US, Emily. This is fantastic. What an inside scope I really get on what was your old town where you came to university, because I got to see the highest academic sort of places such as Harvard. I'm really getting the tour of all tours when you're coming to places like Boston. And I, in fact, spoke to the woman at the helm of Harvard University for the last decade. That is President Drew Faust. She herself talking, interestingly, of the fact that we are going to see the administration talking with biotech leaders and the concern that she too echoes about perhaps the pulling back in funding coming from the administration. Have a little listen to what she told me earlier.
And I've spent a lot of time working with individuals in Congress this spring trying to make the case for how research operates and how universities are dependent on a longstanding partnership with the federal government and on federal support. We've also been concerned about immigration issues and the free flow of talent. I think our greatest advantage as a country in this sphere has been the attraction that we can pull people with to the United States. And we benefit enormously from that.
Emily, I think it's fascinating that academia is really singing from the very same hymn sheet as Silicon Valley leaders are at the moment as well. They are talking about their concerns of immigration. Seriously, it seems as though the president of Harvard is worried about the attraction of U.S. universities amid the administration, perhaps worried that they won't have the same pool of talent coming to Harvard, the pool of talent that is currently helping build new companies in the iLab, which is their incubator at Harvard, many of whom, she says, the companies are actually led by foreign students. And we've heard, of course, those sort of same sentiments echoed by a few famous alumni, not just yourself from Harvard, but, of course, Mark Zuckerberg, not to mention Bill Gates.
We have such a vibrant innovation community in so many dimensions here, and it's exciting to see it growing. It's exciting to see the output, and I think that having Mark Zuckerberg come back is going to be a great moment for everyone to celebrate him and to remind ourselves of the many ways in which we have been innovators and will continue to be innovators.
Interesting, she's therefore also talking very highly of their role within the ecosystem, of the universities, of the schools, more than 20 universities and schools based here in Boston and Massachusetts in general that are helping really build a thriving tech hub, and Mark Zuckerberg being one of them. He comes back to speak at Harvard on May the 25th, Emily.
Caroline, you're so kind to say my name in the same breath as Mark Zuckerberg and Bill Gates. Let's talk a little bit about how big a player Boston is more broadly in the tech and innovation space. I know it's something that the city has been very, very focused on, building new innovation hubs. What have you seen?
I have to say, it blows my mind slightly, because of just coming from Silicon Valley, of course, the real epicenter of technology in California. But then you come here and it's the lifeblood of Boston too. We dug up some amazing stats for you. Basically one third of all of the gross state product, all the money that Massachusetts makes comes from tech. Notably, about half of the payrolls, all the payrolls across Massachusetts are into tech, biotech too. So clearly plenty of amazing statistics as to how crucial Boston and tech are.
All right, Caroline Hyde in Boston with a big week of special coverage next week. Thanks so much, Caroline. We will be seeing you all week long next week. Have a great weekend. Do not forget to catch Bloomberg Tech's special coverage of Boston all next week, 5 p.m. Eastern, 2 p.m. Pacific. I'll be here in San Francisco. Caroline will be on the East Coast. And, of course, we are live streaming on Twitter. Have a wonderful weekend, everyone. We'll see you Monday.